Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. I hope you're all having an absolutely fantastic day today. In today's video, we are taking a look at the recent short-term rally for Bitcoin, discussing what this means from a higher time frame perspective and short-term perspective. We are also going to be discussing the recent economic interest rate news, as well as the Federal Reserve press conference meeting, going over the current developing narrative and how this may potentially shift in favor of buyers over the course of the next couple months. We are going to be taking a look at the daily charts, the 3-day charts, and even the weekly charts, discussing all of the changes that have occurred, if any, as well as the key warning signs and confirmations we still need to confirm continuations higher. Now, before we get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency, with Bitcoin, and the relevant economic news. And if you are interested in joining over 700 members in the VIP channel, you can do that by clicking the pinned comment. Click the admin contact link, click the first link to see a 50+ month trading track record, and the second link to show you a 10+ minute video inside the VIP channel itself. You'll get access to 2 channels, our main VIP channel where we post trading setups with the exact entries, targets, and stop losses, as well as our second channel, which is our exclusive group chat with over 5 different sub chats and over our 700 members discussing cryptocurrency trading on a daily basis. Check it out, we'll see you in there, and let's hop into the content. So taking a look at the recent price action from a macro perspective, not much has really changed other than the fact that we have still managed to sustain above that 44.62 on the weekly RSI. We have managed to continue to remain above the 50 EMA on the weekly, and if we take a look at the 3-day Gaussian channel, we've actually managed to break back above, or we're just breaking back above that 3-day midline. So what we're seeing here is we are seeing a pretty solid attempt at a reversal in this price action that may sustain to a higher time frame. We're going to be discussing that in today's video. And as we can see on the shorter time frame, we can see the price action has managed to break back above the 200 moving average, and we've had one of the 3 points of validation we are looking for on the daily chart now tick itself off for a reversal, with that being the breakout of the downtrend on the RSI. We're going to be discussing what this means in today's video. We'll also briefly go over the broader markets, such as the total market cap and even the altcoin market cap, but we'll do a more in-depth analysis for the altcoin market cap and even Ethereum on our second channel at some point during this week. Let's move over to the economic data and the market data. 24-hour volume is up 43%, 204 billion, with liquidations jumping 65%, sitting at a whopping 350 million. Of the 350 million in liquidations, 271 million coming from short positions, and the rest 82 million coming from long positions. The DXY have slowly but surely continued slightly toward the downside, as we did have a net bullish, I would say a net bullish overall vibe from our interest rate meeting that was following the interest rate release. So we'll discuss that in a second. So with that, we do generally see the dollar weaken and we see asset prices rise. With the meeting, we have seen both Bitcoin and the stock market continue slightly toward the upside, as we have been saying for the S&P 500 to look bullish again. Not only do we really need to see this weekly close occur above the 50 EMA, but we need to eventually see this downtrend on that daily RSI break toward the upside. This is, the weekly RSI. This is something that absolutely needs to occur, as it does suggest that since this top here, we've had this bearish divergence develop into these January highs, what we essentially called the top, And what we are seeing here is that momentum is still downtrending. So we need to see this shift in momentum to suggest that the selling pressure as a consequence of this exhaustion that was developing into January 2025 has now been absorbed by the buyers, and that could facilitate a continuation upwards. Until that occurs, there is still risk for downward movements on the S&P 500, and we'll also be talking about the risks of downward movers for Bitcoin, even though we are now starting to see some good bullish reversal signs, which we need to take at face value. So let's move over to the recent data. This is going to be the economic news. Of course, we just had interest rate decision occur around about 6 hours ago. Now, this decision was nothing more than what was expected. Of course, the market expected to see a interest rate pause, and we saw an interest rate pause. Quoting the Federal Reserve, they're still playing the wait and see approach, but the overall narrative they are giving is overly optimistic. It is overall quite optimistic. Now, they discussed how they are still looking to see inflation continue to around 3.1% by the end of 2027, and they are projecting that rate cuts are more or less going to be dropping through the period towards that date. Now, they are still expecting 2 interest rate reductions in this year, 2025, at least 2, and that is a good sign. We are seeing the Federal Reserve isn't stepping back on that decision. In fact, they are holding strong to the fact that we are going to see 2 interest rate decisions, 2 interest rate cuts in 2025. They also mentioned that while we are expecting to see these 2 interest rate cuts, that developing news around tariffs and the labor market may influence the decisions to potentially cut more or even cut less. Now, the reason I say this overall meeting was towards the bullish side is because they played on the argument that if they do see things actually get better than expected, they will act aggressively in cutting interest rates potentially more than 2 times. So it is more about what is possible in a future period that formulates the basis of perceived systematic risk, which impacts the market, than what is actually happening at the moment. So the overall meeting was more, I would say slightly more to the bullish side, as they opened up the potential and the potential avenues in which we could go down to actually get more aggressive interest rate cuts and more interest rate cuts. They discussed the potential for that occurring centered around how inflation develops and how the labor market develops. And of course, we have also seen the interest rate pause happen, which was in line with what the market expected, meaning the market corrected into this interest rate data. It priced in this interest rate pause, and by fact that it did not go lower when it had the chance to do so, even with all the uncertainty, really opened us up to a potential for a rally. So overall, I don't think this is enough to have, complete and utter confirmation. It never is really going to be until you get those interest rate cuts. And we know that the long-term consequence of interest rate cuts, we'll show you this chart really quickly, the long-term consequence, and if I do have this still up over here, of interest rate cuts are going to be inherently bullish for risk assets following this flow chart over here. And we can see even over here how interest rate trajectory, okay, the dotted trend line, the trajectory of interest rate decisions formulate the perception or perceived systematic risk, which if we apply into this chart, directly influences the beta for our assets and massively increases the value for assets, or at least incentivizes money flowing into assets and away from the US dollar. So if we take a look at this chart here to summarize this before we get into our Bitcoin analysis, what we have essentially seen in terms of the interest rate trajectory, we have been seeing this scenario where we've been plateauing and interest rates have been pausing. And now what we are still seeing is we're seeing confirmation that the overall trajectory at some point, whether it be immediately or later down the line, is going to be still dropping. So we're essentially getting reassurance from them that they're still looking to cut interest rates. And while they do that, the expectation on the macro scale is still going to be along the lines of asset prices rising eventually. So that is why I would say the market has rallied over the past 24 hours, but we'll get into more of that in just a second. So let's jump into the charts, guys. Now, before we do, sign up to BitGet, BitUnix, or BingX. These are the exchanges I personally use. You can find these exchange links down below. You'll get a lifetime trading fee discount of 15% off all your trading fees, including access to a game, all the exclusive campaigns we run on this channel. You also support yourself in your trading and support this channel making all this content for you. You can find the links down below. We'll play a quick ad and we'll jump back back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other two exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay guys, let's get back into it, and we're going to start from the good and then build up to the bad. That's what we're going to do. We'll start on what has changed for the better, and then we're going to talk about what still needs to happen, and then we'll finish up on the warning signs that are still present in the chart. So as always, guys, we can see the market's correct 80%, hypothetically, and then we see one candle and the whole market's bullish again. The market has bipolar. It is just how it is, right? We need to remain objective and true to the charts. What have we seen? What does this mean? How does this change our invalidations and overall perspectives? These are questions we're answering right now. So first and foremost, what have we seen? We saw a correction into the $76,000 level of support, which has identified itself as a level of support as we had a bullish divergence print from a level and the VRPV gap fill at 76,000. So we established a low in the price action. With that low, what have we created in the short term? We have created a uptrend in the price action. This uptrend is represented by this uptrending diagonal trend line. Now, this is going to be our uptrend we have been in ever since March 10th, so about 10 days, just under 2 weeks, and is the uptrending trend line we are acting as our invalidation for the current short-term uptrend. Meaning, while we sustain above this trend line, in context with the fact that we have seen a positive momentum shift on the RSI, we are expecting the price action will not drop back below these lows. And if it does, that is going to be confirmation we are going lower. So what does that really mean for us? It means at the moment, the chart is more bullish than it is bearish. We are expecting continuations up into our downtrend, and that is going to be expected until we break this uptrend. If we break this uptrend, we then expect lower corrections, which we'll discuss later in today's video, potentially into that 70,000, that 72,000, that $74,000 region. So the developments we have had over the last couple days is that we've established some higher lows on the short term, developing a very clear uptrend, and now we have had, with the interest rate decision, of course, a breakout of the daily RSI. The daily RSI breakout, if we take a look at the visible range is essentially this entire chunk of price action that we have been in ever since the RSI been downtrending. It suggests for the first time since we have been in this entire cluster of price action, more specifically since we have been in this overall weekly downtrend, the momentum has flipped positive. Now, what does that mean for the price action? I'll tell you what it doesn't mean first. It doesn't mean we are going to immediately see a green candle to the moon. It doesn't mean that. But what does it actually mean? It means that at least during this period of price action, the selling strength that has been present and developing has begun to dry off, and the buyers have begun to step in at a rate of which we have not seen through the entirety of this downtrend. It is signifying a potential early shift in the trend occurring from a perspective of momentum. This generally, but not always, results in trend breakout. So it generally not always results in actual shifts of the trend. If you have been following our channel for a while, you know I use a 3-point validation method to confirm high time frame trend breaks, this being our strength, our structure, and our trend, our SST. This is a method I've created myself. When I look for breakout confirmations, we look for trend. Okay, trend being the overall downtrend, the trajectory of the price action. We look for structure. Do we have any relevant formations in which the price action is developing. In this instance, we do not. And I look for strength. Strength being a representation of, is the momentum positive or negative in the scope of which we're watching the momentum based on the visible range of which the price action is consolidating or developing in. In this instance, we have a tick for that. We have seen the strength turn positive. Have we seen the trend turn positive? No, we have not. For confirmation, we need to see the majority of SST be a tick. In this instance, we have half, and therefore we do not have the confirmation we need to say with confidence that we are going to immediately go up. But that still remains. If we break through this trend line, we will have the confidence and we will have the confirmation to confirm we are going to go higher. So let's now zoom out to a 3-day chart. Now the 3-day chart is important. Now I do want you to remember this trend line on the daily, because it's going to be present on the 3-day as well. So let's move to the 3-day chart. What we can see here on the 3-day chart is we have a very similar downtrend here on the RSI. Let's just go ahead and draw this one in. And the RSI on the 3-day has as well broken upwards. This is a good sign. The 3-day closing now, as we can see, a very, very good early preliminary sign of a reversal in the weekly. What we can see as well is the price action here has broken through the Gaussian channel midline, and we are now retesting a high. We are retesting this high point right over here at around 87,200 as a point of resistance. This is going to be our prior highs on the 3-day. This is a level we need to clear above. This is going to be a level of resistance. In fact, this resistance moves all the way up into the change of character at 89,000, which we can see lines up perfectly with that daily downtrend, that weekly downtrend we have just shown you on the daily chart. So we have resistance now moving into this level of this trend, which we need to break through to actually flip bullish. So am I going to be aping into massive positions right over here? No, I'm not. I'm not going to. There are some altcoins that are breaking their trends that may have better risk returns, but for Bitcoin, confirmation is the insurance you pay to be right. And when we're looking at these higher time frame trends, the percentage you forego, okay, missing a small amount over here, if that percentage you forego dramatically increases your probability of success later down the line, then it is a percentage worth foregoing, okay? Remember, your profit has nothing to do with the value of the asset of which you bought, but the percentage of change between the price you entered and the price you sold. It is the percentage change that matters, not the actual value. The value is a means to evaluate the asset based on the perception of value in context of a whole variety of economic events, perceived systematic risk, and of course industry-specific developments. So I do not think this is enough for Bitcoin for me to say, yes, we are bullish, yes, we are going higher, but it is a good start. Now, a lot of people are going to hate that I say that, but that's just the reality. That is the way I see the charts. We have had a really good sign over here. This is a great start. We have an uptrend. The price action is definitely bullish on the short term, and I will expect if we remain above this uptrend, we will eventually break out and continue higher. But if I'm looking at the charts right now, from where we are right now, is this the point of which we just ape into the market? No, it's not. I don't think it is. I think we wait a little bit more. We wait for these pullbacks to these trends. We wait to see how that develops. But overall, a very, very good sign. We've broken over the 3-day. We've seen the daily momentum flip positive. We are seeing the narrative from the Federal Reserve confirm their expectations, which is they're going to see 2 interest rate reductions. And we are seeing the dominoes line up in a way which could lead to these higher time frame reversals. Let's now move to the weekly chart, as the weekly chart is still very important. If we look at the weekly chart, there are still some key levels we are paying attention to. Of course, number one, we can extrapolate that RSI onto the weekly downtrend, the weekly RSI trend as represented by this trend line. What we can see here in numerous other occasions in periods where we had these drawn out periods of consolidation in the price action, whether it be sideways or whether it be downwards. We have also had these weekly downtrends in the RSI. To show you the best examples, we're going to draw with 3 examples in right over here. These are going to be the 3 most prominent examples, all of which, mind you, have happened above the 44.62 level. You can see all of these levels have happened above 44.62. We had got this horizontal consolidation right over here. We had got this macro descending channel formation right over here. And now you've got a similar wedge-like or descending formation right over here. A very unclear downtrend, but it is still a trend nevertheless. What we saw is when we had that weekly RSI breakout, we saw a strong continuation. We had that weekly RSI breakout, we had a strong continuation. We are expecting a similar reaction if we get that weekly RSI breakout prior to the loss of 44.6. If we lose 44.6, we are going to see a stronger and more aggressive correction, which could potentially end this bull market we have been in for the last 2 years. Remember, guys, the entirety of the bull market, the entirety of the trend since January 2023, right over here, we have been above 44.6 the entire time. If we lose this level, we are in for a world of pain for the broader markets and for Bitcoin. And by the looks of things on the short term, although we have seen a nice rally, we have not done what we need to do yet to confirm that this downtrend is over and we are going to continue. So I don't want to come across too bearish. In fact, I want to be a little bit more optimistic about this, but I have to be realistic as well. And I think there's optimism and realism, and I think we need to play on the side of realism a bit more than we play on the side of optimism when it comes to trading, because if you don't, you can kind of skew yourself into positions based on subjective biases, which could destroy you. So you need to be a little bit cautious with that. So in terms of the overall trend is still bullish. There's absolutely no doubt about that. The macro trend is bullish. We have had periods of weakness, which resulted in downtrends as we projected perfectly. But if we're looking at the 44.6 being a trigger point for the bearish trend to start, we are above there. If we're looking at the 50 EMA to be a trigger for a correction towards the 200 moving average, we are above there. If we're looking at the Gaussian channel upper band to be a trigger for a move below the band, we are still above there. However, in terms of immediate price action, in terms of what is happening now, that could extrapolate to a full-blown reversal and this downtrend exhausting, resulting in an uptrend, the things we need to see for that to occur have not quite yet happened. They have not quite yet happened. They're getting very, very close, and we're getting closer and closer, particularly with this recent news. But that doesn't take away from the fact that we have not got that confirmation yet. We can get very, very close, but until the confirmation happens, it hasn't happened. And I think that's a very important thing to note. Now, there are always going to be good opportunities. I look at the altcoin market. There are a lot of good opportunities in the altcoin market right now for potential positions. Will those positions sustain? That's a whole nother question, but we are seeing the opportunities arise and develop. We look at the weekly on the total market cap. We are still above here. The same analysis provides when we sustain above this trend line, we are okay. We drop below the trend line, we're in a world of pain. Okay, so that is my analysis today. I guess a lot of people maybe were hoping for a little bit more of a definitive answer, but I've given you a very definitive answer in terms of what needs to happen. The reality is we have seen a nice rally, but we haven't broken any significant levels which directly change the probabilities in the trend, right? If we're looking at levels of importance are going to be that $89,000 region, right? Levels of importance. We're looking at this 4-hour 200 moving average, a level we've been underneath essentially since the breakdown at 96K. We're looking at levels such as our prior lower highs. At that change of character level, we marked out that as that point of resistance we are currently sitting in. We're looking at the downtrend on the daily. These levels of significance, when if broken, dramatically change the probabilities of specific continuations in select directions based on, again, the context of the charts and the technical suggestions of the charts. So at the moment, a nice rally, not enough yet to confirm we're going higher, but definitely enough to potentially laying the foundation for that reversal to develop in a future period, maybe in April when we see, the economic policies, quantitative easing begin. I read up something. I have to do some more research on that. Again, in Australia, I only just woke up. There's a lot of things that happen overnight here in Australian time. So there's a lot of research I need to do, a lot of catch up I need to do with all the things that have developed over the last 24 hours. And I will do that. So we'll talk about that in our next video. But overall, I think that is going to be the analysis done for today. Hope you guys enjoyed. Hope you guys learned something. And that is it. Thank you for tuning in, and I'll catch you guys in the next video tomorrow. Have a great day, and I'll see you then. Bye.